One thing I wanted to address today on the channel that I haven't really talked about, at least not in detail in the past, is why the stock market is so high while the rest of the economy feels completely broken right now. And it's not just that it feels broken, it is actually broken. The other day I made a video talking about how the economy is crashing right now and everybody knows it. It's not a surprise. It can't be hidden any longer based on government statistics or data out there on unemployment or the job market. People know that it's crashing right now and things are only getting worse, not better. But then why in the world is the stock market doing so well? Because in the past, even just going back to the GFC in 2008, when the economy wasn't doing well back then, the stock market was in free fall. We saw a big stock market crash back then, and a bad economy was kind of synonymous with a drop in the stock market. But it seems like today, no matter what's going on, the stock market kind of just goes up. So what's happening? For decades, people thought that the stock market was kind of a mirror of economic health. And some people still think that. Even our government largely looks at the stock market and says, well, that's doing good, so the economy must be doing great, which is actually not true at all. The stock market is no longer a mirror of the economy. It's a distortion of the economy. Between decades of monetary excess, financial engineering, and broken market forces is creating this illusion that things are still doing well, but the reality is it couldn't be further from the truth. One great example in the stock market of this is Nvidia. In August, Nvidia's market cap hit $4.4 trillion, which is more than the entire GDP of Japan, an actual country that produces all types of goods and services that it exports around the world. And on paper, Nvidia is worth more than all of US farmland combined and nearly 1/5 of the value of all the gold ever mined. And of course, Nvidia does make powerful AI chips, and AI is seeing a big boom right now and a big demand for AI. However, AI doesn't feed people, guys. It doesn't build roads. It doesn't grow crops. It doesn't make any products that people actually use. So how can a chip maker like Nvidia be worth more than entire nations that actually produce thousands of goods and services that people actually need and use? That's the new absurdity of today's modern finance in the world that we're living in right now, where the valuations of these companies no longer reflect production or utility, but just pure speculation on where things might go with AI. And of course, it's not just Nvidia. You have the entire Magnificent Seven, stocks like Apple, Microsoft, Amazon, Alphabet, Meta, Tesla, and of course, Nvidia. All those companies are now worth more than $19 trillion combined. These numbers are so inflated that they have lost their meaning. Most people probably don't even know how much $19 trillion is. Like if you had to write that number out on a piece of paper, you really got to be counting your zeros to make sure you get it right. And so this shows you that the stock market no longer reflects reality, but what it does reflect is cheap money and speculative mania that have turned finance into an alternate universe today. And for anybody who wants to know, I am walking down Jamaica Street in Tiburon, California. But to understand how we got to this point, we need to rewind back to the 1970s when the Bretton Woods system collapsed. And in case anybody doesn't know what that is, that's when we took the dollar off the gold standard back in 1971, which was probably, in retrospect, the largest financial mistake that this country has ever made. And things have progressively gotten worse since then when it comes to inflation, when it comes to the degradation of the value of the dollar, as well as people's quality of life and standard of living. Because once the dollar was no longer tied to the value of gold, money became purely fiat currency created out of nothing, just based on an IOU, a promise that, oh yeah, we're going to pay, and this dollar is worth something. Somebody will accept it as a store of value. The problem is, once the dollar got separated from the value of gold, you need more of those IOUs, aka dollars, to be able to pay for everything. That definitely kicked things off, but the real kicker and the turning point, kind of no turning back, was back in 2008 when we had the GFC. In order to save the collapsing economy, especially the banks and the auto industry, the Fed launched quantitative easing. They also had pretty much 0% interest rates and massive government deficit spending, and that was all supposed to be temporary, but we heard that story before because so was taking the dollar off the gold standard, and that was back in 1971, and last I checked, we haven't gone back on it. So just like that false promise, the quantitative easing and the cheap money and the low interest rates became permanent, and trillions of dollars were created out of thin air and handed to the banks, the corporations, and the government. And of course, all these people got rich off the backs of everybody else, and the money didn't flow anywhere close to evenly. It went to the closest source, which is Wall Street, the hedge funds, and the big corporations, not working families, not small businesses. And economists actually have a name for this. It is called the Cantillon effect. This is when new money enters the economy, and whoever gets that money first are the ones who benefit the most, because of course that money still goes the furthest, right? If you got millions of dollars before inflation was a problem, well, that millions of dollars is going to buy you a whole lot more goods and services than it will after inflation has already skyrocketed, right? But by the time that money trickles down to everybody else, the cost of living has already skyrocketed. And that's why so many people in 2025 today are struggling to make ends meet. And so the result of all of this is two-tiered inflation. You have asset inflation on one side of the spectrum where stocks, bonds, real estate have all skyrocketed, enriching the wealthiest people even further. And then on the other side, you have consumer inflation where food, housing, and energy costs have risen like crazy, and people's wages have not been anywhere close to be able to keep up. And so all of this has created the illusion of growth in our economy, especially when you look at the stock market. You know, for over a decade, money was practically free to borrow up until recently when the Fed launched its interest rate hiking cycle. In Europe, the interest rates actually went negative, where banks were literally paying companies to borrow. And so corporations use all this cheap debt to buy back their own shares, reducing the number of stocks in circulation and driving up the prices artificially. And this didn't actually make companies stronger, it just made them look richer on paper, and it created the illusion of growth while central banks congratulated themselves for stabilizing the markets, when in reality, all they did was just make it so that these companies look richer, and it gives a lot of people who want to invest in the market FOMO, like, oh, if we don't take advantage of this now, we're going to lose out on all these gains. And so fast forward to today, we have essentially inflated the largest asset bubble in the history of the world. And that's essentially why right now in 2025, we are just in this casino economy, okay? Markets used to be about the price discovery. Investors determined the fair value of companies based on their earnings and their risk. But now they're just casinos, and the odds are sent by all the central banks. You know, because they're the ones who are in charge of the monetary policy. They're the ones who are in charge of interest rates. And that all reflects on how much money gets pumped into or sucked out of the stock market and bond market on any given day. You know, even professional investors admit that the game is completely rigged, okay? A Bank of America survey found out that 91% of fund managers believe U.S. equities are overvalued. That's basically all of them. But here's the twist. They're still fully invested in the market. And why are they still fully invested? Because there's no alternative. These people are locked in. Central banks have made it so that speculation is essentially the only game in town now. And this has all created an economic crisis because we are now living in a world of the haves and have-nots more than ever before. People who own these assets before they were inflated, and people who are struggling to get their hands on them now after the inflation has already been made. And that's why you're seeing home ownership completely out of reach of the average American. You're seeing retirement savings not able to keep up with the cost of living anymore. Young people see wealth as something just like a fantasy or a dream, something that's completely unattainable, and who can blame them? And as the wealth continues to concentrate at the top, the trust in the system completely erodes and could even lead us down a path to becoming a socialist country, which many would already say that we are on the way to being right now. So we now live in a world where the paper wealth actually grows faster than real wealth. The numbers on the screen rise and the real wages go down when adjusted for inflation. And people are celebrating new record highs in the S&P 500 while the average family is struggling to put food on the table or pay the rent. But make no mistake, this stock market bubble is extremely fragile, okay? All it's going to take is one big rate hike or one debt crisis, one geopolitical shock, anything like that could wipe out trillions in paper wealth overnight. And the real danger comes after the crash when people lose faith in the system, just like we saw in 2008. You know, people start panic selling. They see their portfolio go down by 15 or 20% overnight. And then everybody starts thinking, well, I better sell now and salvage what little I have left before it goes down even further. And that creates that downward spiral where everybody's just trying to get out and it's a race to the bottom. So unless this monetary system is recalibrated, which I highly doubt that's ever going to happen until it's absolutely necessary because, you know, the richest people are benefiting from this, the next collapse is going to be an absolute reckoning for everybody. My biggest concern with it is, of course, the government and Fed reaction to it, because their reaction is always just to make things worse, you know? And I have zero faith in these people that they're going to make anything better when push comes to shove. They have proven time and time again that they cannot handle these crisis situations in any meaningful way. Their solution is always to print more money, to lower interest rates back down to zero, and watch everything get inflated away even further. And then once again, the people who already have these assets get even richer while everybody else who doesn't gets poorer. Not only is it morally wrong, but also it is not a way to create a strong economy either.